Hey guys, and welcome back to the channel. I hope you guys are having a fantastic day, and thanks for tuning in to another episode of The Mortgage Maze, where we're bringing you guys a video every single week about a mortgage related topic. And we're greeted again with Mr. Stephen Knorr with Alcova Mortgage right here in Charlotte. And hey guys, if you're new to the channel, my name is Brian Taylor and I'm the owner of Dreamline Realty right here in Charlotte as well. And guys, this is our third episode in the series, and if you missed our last two episodes where we talked about the 2-1 buy down and we talked about how to qualify for a mortgage if you have student loans, you can find those in the channel playlist below, ironically enough called The Mortgage Maze. But in today's video, we are talking about why a local lender matters. So guys, over the last several months with interest rates rising and new loan applications decreasing, there's a lot of lenders, guys, that are trying to figure out if they're even going to be able to stay in business. So let's take a look at some of these headlines. The first one reads, "A shakeout among mortgage lenders is coming, according to CEO of bank that left the business." Then we have this one, "Some companies are closing their doors, others are shutting down divisions. Rocket Mortgage CEO outlines plans to navigate the dramatic decline in mortgages." And then we have our last one here that says, "Wells Fargo, once the #1 player in mortgages, is stepping back from the housing market," guys. So that's pretty crazy stuff, right? But here's the thing, from a real estate perspective, it has always been more challenging to get a transaction done when a client of ours is using a big bank or an online lender. And guys, I'm not picking on these people. I'm not picking on them at all. But what happens is a lot of these people are located in different parts of the country. There's different time zones we have to worry about. And frankly, communication is normally just a flat out train wreck. And a lot of times when that stuff happens, closing dates are missed and it can really screw up everything with the transaction, especially for buyers and sellers. So I wanted to bring Stephen onto the channel today to talk about reasons why having a local lender can save you a lot of frustration and a lot of headaches. So let's get Stephen on right now. Hey Stephen, how are you today?
Hey, I'm well, Brian. Good to hear from you.
Yeah, great to have you back on the channel again. Hey Stephen, you've been in the business forever. When you see headlines like this, I mean, you know that over the last several months, a lot of these lenders and big banks are struggling, right? With mortgage rates going up. So when you see stuff like this, like what's your reaction?
It's unfortunate for those companies, that's for sure. So what happened in the industry is those online lenders and big banks, they were staffed for the refinance boom. So obviously rates fell to historic lows, and literally overnight we saw one of the biggest rate jumps in history, and it continued to climb until rates exceeded 7%. That volume fell literally as quick as the rates climbed, and there just wasn't a need for that staff. So the one thing about a local lender like myself, we are relationship based, whereas those companies are transactional. They have a monster to feed. They need to get you in and out the door, collect the fee, and move on to the next one. We need to close your loan. Obviously, that puts food on the table for our family, but we need to get to know you. We want to get to know you, get to know your family, learn where you go to church, figure out what your kids do, and help you become a part of the community, because we're referral based. We don't spend any money on advertising. You're not going to see the Knorr Group of Alcova Mortgage Super Bowl ad like you're going to see for Rocket Mortgage, but somebody's paying for all that. That's the consumer to feed that monster. So the big thing for local lenders is we're not going to go out of business. We are staffed appropriately, and we are set up financially to get through lean and mean times. This is my 17th year in the business, and unfortunately, I've been through this roller coaster a couple times. And being relationship based, we can absorb more of the decline than the big banks and online lenders can.
Yeah, that's awesome. We do a lot of deals, with you, of course. And one of the things that is amazing with having a local lender right here is you guys know the local real estate market. We've had situations where we've dealt with these bigger banks and they're located in Utah, but then you're talking to processors in New Mexico, and it's a headache. It's a headache. What I love about you guys is I can pick up the phone and call either you or someone on your team, and we get a response back within an hour. So that's a beautiful thing, whereas you never know who you're going to talk to and in some of these other places, because you never know who's going to pick up the phone.
Right. And a couple of things I'd like to talk about that is that goes back to being relationship based. You will literally have my cell phone and a team member's cell phone. Every weekend, we establish a weekend warrior so that our real estate agents and our clients have a lifeline, because we understand our job is 8 to 5, but so is everybody else's. So a lot of the times to look at houses or communicate with clients is after hours or on the weekend. I just had a call last Saturday. This is a true story. A client called me and said, hey, I should have used you. I didn't. I went with the online person and I called them and they're out of business. And I said, oh my goodness, I can help you. But, that's the reality of the mortgage crunch right now, is that people don't understand, if those online lenders go out of business, there's no money to close your house. So I was able to help this client on a Saturday, get them reapproved. And also that client was disclosing to me, which this is another topic I'd like to dive into, a lot of online lenders are offering the best lowest rate, but that doesn't always mean that's the right rate, because they're charging outrageous fees. So maybe we can queue up a next one, Brian, but the local guy, I'm passionate about helping you, and I'm never going to give you a loan that I wouldn't give to myself or my family. And sometimes, just being honest with people about how rates work and what we're hoping with refinance to come in the future, the lowest rate isn't always the right rate right now. But the online people, that's all they got to sell. They have no service. They have no roots in the community, and they spend millions of dollars on marketing, unlike us. So that's their platform.
Yeah, no, that makes complete sense. Where do you see the industry going from a mortgage perspective? I know rates are probably going to be up for a little while. Do you see more mortgage companies falling off the table here as we go forward? And are the smaller local ones the ones that are going to survive?
I do unfortunately see more layoffs coming. I mean, even a small company like us, Alcova, we had to do a few layoffs in the operations side just because with sales coming down, there's not enough staff. So even local people, have felt that wrath, but we're able to survive at a better capacity. But until the volume comes back, meaning more, there's still a housing shortage. There's not enough inventory. So until homes hit the market, there's lots of people that want to buy a house. They're just waiting for that right one to come. And as the rates come down, I think you'll see that demand. But otherwise, the mortgage companies, we're just hanging on by a thread. But local lenders like myself, we're not going anywhere.
Yeah, and that's what I keep telling everybody. A lot of people are on the sidelines now waiting this thing out. And you mentioned a great point right there, is inventory is so low right now. So what I think is happening overall is there are so many buyers right now that are just waiting things out on the sidelines, waiting for interest rates to come down, waiting for home prices to fall a little more. I can't predict the future, but I see maybe another 5% decline right here in the Charlotte market. And then I really think we've hit the bottom. I think we are very close to people really realizing that this is the new normal we're in, right? But my point with that is all of these buyers are on the sideline. There's so much pent up demand that's being built right now. So when interest rates do fall, we have a shortage of inventory and the buyers are going to flood the market. And unfortunately, I really kind of feel like we could go right back into multiple offers. And actually, we're seeing multiple offers right now in certain areas of Charlotte for the right property, the right price. In fact, you told me this week, Stephen, that you had 4 multiple offers last weekend that you were working on. So it's not going away anytime soon. We need more houses. We need more new construction. We need more sellers willing to sell. And the other side of that is with interest rates being up, these sellers that are holding on to a 2.75 or 3.5% fixed rate, they're not selling. They have no incentive to sell. But yeah, you had multiple offers last weekend, right?
That is true. We had 4 clients and they were all properties that were coming soon to the market. So a lot of the stuff that is on the market, Brian, you know better than I do, is a little bit outdated. Maybe people are hanging on to yesterday's prices. And I think I saw a stat where 40% of current homeowners have a rate between 2.5 and 5. So as the rates get closer to that 5, they're going to be more willing to let go of that rate and move on to the next property they desire. But that next property has to hit the market, and it'll be a snowball effect once that happens. So for mortgage companies right now, the best thing for me is I focus on service. So I'm not selling a rate, I'm selling service, and I'm helping the client navigate this very confusing mortgage maze, right? So we're just focused on coaching and educating people that rate isn't everything, but when that property comes to market, go ahead and get pre-approved. It's free. It's good for 4 months, and have your gun loaded so that when you're ready to fire, you don't miss out on that property when it does hit the market, because it will hit the market, and we want to make sure we get them closed.
Yeah, and that was a segue right into the next thing I was going to talk about is, for buyers right now that are on the sidelines. I mean, when is it too soon to say, hey, let me go ahead, at least get pre-approved, figure out what I can qualify for? Because a lot of people think they're going to wait a year and then the right property comes up and they want to make a move on it. And maybe there's some things that are holding them back on their credit report. So you said pre-approvals are lasting for 4 months, right?
Yes, most of them are 120 days. Some loan products are 90, but most of them are 120 days. And for us, there's no cost. Again, some lenders do charge you to do a pre-approval. Don't ever use those because there's no need for that. It doesn't have a negative impact on your credit. A lot of people have that misconception. A lot of the verifications we can do are good for that same time point. So I just always make the reference, if you're a hunter, you're not going to go in the woods without any bullets, just in case that trophy buck walks in front of you. You got to be able to fire. And, we also want to make sure that, using a doctor analogy, let the doctor take a look at the x-ray. A lot of people say, well, I got some problems, but I'm going to fix it myself. You wouldn't try to fix your own broken leg. You go to the doctor. So if you have some challenges or you have some concerns, it's never too soon to start because there's no risk. You can only gain from letting the experts like ourselves take a look at your file and prepare you a game plan to get ready during the waiting period so that when it does happen, you're ready to hit the field, not still in the locker room.
Yeah, exactly. Hey guys, if you're getting any value out of this video, give the video a like. Don't forget to subscribe to the channel so you don't miss out on all of the new videos that we're putting out every week with Stephen Knorr here with Alcova Mortgage. And Stephen, I'm going to put your information in the link of the description below, the video description below. So if anyone wants to reach out to you, they know how to find you. Any last parting words, Stephen, you want to share before we wrap this one up? But I do think next time we get together, we should talk about those scenarios where you're talking about, lower rate and higher fees. And I think a lot of people might be getting ripped off right now, honestly, because they just don't know any better.
I'll get you some actual data where we can look at actual files. We'll keep the clients confidential of ways we've saved people literally tens of thousands of dollars from online lenders. And again, like you said, not knocking them, but I exist for a reason, and that's to take care of people. So looking forward to doing that. I think that'll have a big impact.
Yeah, that's awesome. All right, guys, we're going to wrap this one up for today, but subscribe to the channel, like the video, and we're going to be back next week with Stephen Knorr. Guys, thanks so much for tuning in today, and we'll catch you on the next one.